You wake up one morning, you check your phone, the stock market crashes and your savings disappear. Your retirement fund halved. The streets engulfed in panic. They're losing their homes, they're losing their jobs, their futures. A penthouse office with floor-to-ceiling windows. The billionaire sits inside, sips his cup of coffee, and smiles. Why? Because while you're losing everything, he's about to get richer than he's ever been. This isn't a conspiracy theory. This is a pattern. It's a 10-year cycle, 15 years, 20. If you don't get it, you're going to be on the losing side 100% of the time. Welcome to Shadow Equity Channel, where we follow the money and reveal the shadows. Because what I'm about to tell you will change how you see money forever. I highly recommend you hit that like and subscribe button right now. Let me take you back to 2008, the Great Recession. Banks collapse. When Lehman Brothers filed for bankruptcy, millions of common citizens lost their life savings overnight. They showed entire families evicted from homes they had lived in for decades, unemployment lines around the block. The media called it a crisis, a disaster, the worst economic collapse since the Great Depression. But here's what they didn't tell you. And as the average American lost 40% of their wealth, the richest Americans prepared to have the biggest shopping spree in American history. Think about it. What happens to prices on the stock market when it crashes? They fall. The value of stocks that would have sold for $100 is now $20. Houses worth $500,000 are now $150,000. To you, that looks like loss. To them, it looks like a clearance sale. Warren Buffett has a famous saying, "Be fearful when others are greedy, and greedy when others are fearful." You were scared in 2008. The super rich were greedy. They were buying stocks for pennies on the dollar. They purchased thousands of foreclosed homes and bought the shells of broken businesses for pennies on the dollar. And then they waited, because they knew something you didn't. They knew the crash wasn't the end, it was the beginning. Now let me tell you how this machine works. Economic crashes don't destroy wealth, they transfer it. Read that again. They don't destroy wealth, they transfer it, from those who don't know the game to those who do. Here's the cycle. Everything is going great, and our economy is growing. The stock market is soaring, real estate is hot. Everyone feels rich on paper. Your 401k has done well. Your house is worth more than you bought it for, and banks are lending loans like candy. And the press goes wild. Best economy ever. Get in now before you miss out. So what do? You buy, you invest, you take on debt, because everyone around you is doing the same thing. Your neighbor just bought a new car. Your coworker is flipping houses. Your friend is day trading and making thousands. You don't want to be left behind. But behind closed doors, the smart money, the billionaires, the hedge funds, the people with access to information you'll never see it differently. Valuations are high. Debt abounds in the system. The market is driven by emotion, not fundamentals. So quietly, very quietly, they start selling. Not all at once, they're too smart for that. They sell slowly, carefully, and take their profits while the average investor is still buying. Then it happens. Maybe it's a bank failure, maybe it's a pandemic, maybe it's a political crisis. The trigger doesn't really matter. What matters is the panic. Stock prices plummet, credit freezes, companies go bankrupt, and suddenly everyone is selling. Everybody's desperate. They need money to pay their mortgages, their bills, their debts. So they're selling at a loss. They have no choice. And who's buying? The same people who sold at the peak. They're buying your stocks at 30 cents on the dollar. They're buying your home at auction. They're buying entire companies that are too big to fail. Now, here's the beautiful part. Beautiful for them, painful for you. Governments step in. They print money. They bail out banks. They lower interest rates to zero. They do everything they can to stop the bleeding. And slowly but surely, the market will recover. Stocks will go back up. Real estate rebounds. But here's the thing. You sold. You sold at the bottom because you were scared, because you needed the cash, because you didn't understand the game. But they bought at the bottom, and now, as prices have rebounded, their fortunes multiply. It made them rich. It made you poor. This is the controlled collapse. Let me give you real names, real numbers. After the 2008 financial crisis, billionaires such as Carl Icahn, John Paulson, and Warren Buffett made their fortunes. Paulson's hedge fund made $15 billion betting against the housing market. Warren Buffett's Berkshire Hathaway bought stakes in Goldman Sachs, General Electric, and dozens of other firms at bargain basement prices in a buying spree. By 2013, Buffett's fortune had grown by $37 billion, while typical American income had not. They still had not recovered the wealth. Or look at what happened in 2020, the COVID pandemic. These events drove markets into a crash in March, millions to be laid off, and small businesses to close. Nevertheless, due to COVID-19 lockdowns, by the end of 2020, American billionaires had gained $1.1 trillion in wealth, including a gain of $70 billion for Jeff Bezos. Elon Musk gained $140 billion. How? They had the cash when everyone else got desperate. They bought when everyone else was selling. They knew that the crash wouldn't last, the recovery was coming, and the wealth transfer was guaranteed. Now, you're probably thinking, but didn't they lose money too when the market crashed? Sure, on paper. So for a couple of weeks or maybe a couple of months, they didn't sell. None of them panicked. They knew the game. Because here's the secret they understand. You only lose money when you sell. If your stocks are down 50% and you don't sell, you haven't lost anything. It's just an imaginary number. But if you panic and sell it when it is down, you lock in that loss. The rich don't panic, they plan. Now, let's talk about you. Why do you panic when they don't? It's not that you're dumb, it's that the system is designed to make you panic. Think about your situation. You have a job, maybe even a good one. You have bills, a mortgage, a family to feed. Your wealth isn't spread across 10 companies or 5 countries, all in one house, one 401k, one paycheck. And when the market crashes, you can't afford to wait it out. You can't afford to buy the dip. You need cash now. You need to survive. So you sell at a loss because you have no choice. Meanwhile, the billionaire has cash reserves to last 10 lifetimes. They have no debt, or their debt is really not debt at all. It is debt on their own terms. He has diverse investments, and he is surrounded by advisors, accountants, and lawyers. If the market collapses, he doesn't have to sell anything as he has capital to invest. This is the game, and it's rigged. But here's the thing, you can learn the rules. You can't become a billionaire overnight, but you can stop being a victim. So what do you do with this knowledge? First thing to know, cash is king during a crash. Not debt, not fancy investments you don't understand. Cash, or assets you can quickly turn into cash. Second, don't invest money you can't afford to lose. If you need that money to pay rent, to feed your kids, to survive, then it shouldn't be in the stock market. Third, set up an emergency fund worth 6 months' expenses, maybe more. This is the power you have when you do not panic. You can hold on when no one else will. Fourth, identify the cycle. When everyone around you is getting rich quick, it's probably not the best time to get involved. That's the time to be careful. When everybody's panicking, everybody's selling, that's the time to go back. And fifth, and this is the most important one, educate yourself. Stop relying on the news to tell you what's happening. They're selling fear and hype, not truth. Read books, study history, understand how it really works. Because the next crash is coming, it always does. And when it comes, you have a choice. You can be the person panicking and selling at a loss, or you can be the person who's prepared, who's calm, who sees the opportunity in the chaos. Remember where we started. You wake up one morning, the entire market has crashed, your savings are evaporating. But now you know the truth. But the crash is not a loss, it's an act, a wealth transfer machine that runs on fear and ignorance. The rich do not fear a crash, as their burdens will be temporary, and the government will intervene, and prices will recover. And they know that, just as you're panicking, they're setting themselves up to get rich. This cycle has been seen in previous situations, like the Great Depression, the dot-com bubble,
the 2008 financial crisis, the 2020 pandemic crash, and it will happen again. The question is, which side will you find yourself on? Will you be the one who loses everything, or will you be the one who understands the game? The choice is yours. However, you're only able to do this if you're provided with the right information. So make sure you subscribe right now to Shadow Equity and hit that notification bell so you never miss any of our videos. And like this video if it opened your eyes. Don't forget to share it, because someone you know needs to understand this before the next crash. Remember, in the world of money, knowledge isn't just power, it's survival.